Canada's property casualty insurers used robust capital buffers, disciplined pricing approaches, and effective risk management strategies to offset the impact of the country's costliest catastrophe year on record. That according to a new AM Best report. The report is being issued ahead of an insurance market briefing that AM Best will host in Toronto on October 30th. We're joined today by senior financial analyst Cristian Sieira, who contributed to the report. He will also be one of the presenters at this month's briefing. And Cristian, how would you characterize the performance of Canada's PC insurers, especially amid some challenging conditions?
Yeah, so overall, it was another strong year for the Canadian property casualty insurance industry in Canada. Profitability did dip compared to the prior year, mainly because of a historic catastrophe season that led to over $9 billion in total losses. Even with that, though, the industry did report about $6.3 billion in net income, marking the fifth consecutive year of earning at least $4 billion. A big part of that continued strength comes from solid investment performance. We have seen higher interest rates in recent years, which has really benefited insurers' fixed income portfolios. In addition, on the underwriting side, performance continues to be profitable, although we do note an uptick in the combined ratio to about 95.4%, largely due to four major catastrophe events that occurred in the third quarter of the year. At the same time, net insurance revenue rose about 18%, which shows that insurers are generating rate increases to combat those higher loss costs. So, despite all these challenges, we are seeing that results continue to highlight the resilience of the Canadian P&C industry.
So AM Best is maintaining a stable outlook on the market segment. Cristian, what's the rationale behind that?
Sure, we touched on the continued profitability of the sector, which takes into account favorable investment returns and resilient underwriting. But in addition, the stable outlook reflects the market's robust risk-adjusted capitalization, adequate reinsurance capacity, and improving risk management techniques and regulatory frameworks. On the risk capital front, we've seen total equity in the Canadian P&C sector grow at an impressive pace over the last 5 years, about 18% on a compound annual basis. That's pretty significant growth, especially given the broader economic uncertainty and industry challenges faced over the period. And as such, I do want to point out that all of our Canadian P&C entities rated in Canada do hold risk-adjusted capital levels at the very strong level according to AM Best capital adequacy ratio. On the reinsurance front, Canada remains a very attractive market with ample capacity. Even though 2024 did see around $9 billion in total losses, that's still pretty modest compared to global total losses. And in addition, premium volumes are growing, primary insurers are maintaining solid underwriting discipline, so that means that reinsurers are continuing to find steady, profitable business opportunities in Canada. Insurers also continue to view risk management as a focal point and use much more sophisticated tools and data to better manage their exposures, especially around risks such as climate and weather events, as well as cyber threats. Lastly, on the regulatory standpoint, Canada's framework is widely respected internationally. The Office of the Superintendent of Financial Institutions continues to have strong capital and solvency requirements, a rigorous risk-based supervision, and enhanced disclosure requirements. Together, these developments have created a more resilient and forward-looking insurance sector.
Are there any challenges that the sector faces as we close out 2025 and move into 2026?
Yeah, when we look at the headwinds for the industry, the biggest risk continues to be the rising frequency and severity of catastrophe-related events. And as we mentioned earlier, 2024 was a record-breaking year for insured catastrophe losses, over $9 billion, and that does surpass the previous high of $6.2 billion back in 2016. And while the first half of 2025 hasn't yet reached those significant levels, we have seen pretty big events that continue to impact the country. We're also seeing ongoing challenges in the auto insurance sector. So auto theft does remain elevated, although we are seeing encouraging progress thanks to stronger collaboration between law enforcement, government agencies, and insurers. In Alberta, regulatory hurdles continue to create pressure, but there are reform measures underway that should assist over the long term. And finally, geopolitical risk remains a big concern. For Canada, we're watching the evolving tariff situation with the United States. A recent U.S. decision to impose additional tariffs on Canada could have knock-on effects on the insurance industry, particularly through higher costs for lumber and auto vehicles, which would in turn push up claim costs for both property and auto insurance.
Thanks, Cristian.
Thanks, John.
That was senior financial analyst Cristian Sieira. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.